Elliott Wave tutorial part 4, leading and ending diagonals. If you would like to know more, check out the Financial Freedom Masterclass designed for anyone to analyze, trade and invest in the stock market. So here we have a leading diagonal. This can only be formed in wave A position or wave 1 position. On the right hand side in the blue, we have the standard textbook definition of an impulse. Wave 3 is not allowed to be the shortest, 4 cannot cross into the territory of wave 1 and 2 is not allowed to fall below the start of 0. However, as markets have evolved over time, back in the 1970s, we encountered a new type of wave 1 diagonal, which was really here to complicate a lot of people and confuse a lot of people because it looks corrective, but actually it does have impulsive nature to it. What are the rules for this? Well, number 1, wave 4 is actually allowed in a leading diagonal to cross into the territory of 1 and 2. Wave 3, however, still can't be the shortest, and that's really the key here. Wave 3 still cannot be the shortest. That should give you enough information, we would hope, to distinguish this from a corrective pattern. Wave 2 and 4 are always corrective, but waves 1, 3, or 5 can be corrective or impulsive. In my experience, it is often the case, and statistically this is the case too, that wave 1 tends to be the longest and tends to be impulsive. If I'm looking at wave 1, 3 and 5, all corrective, 2 and 4 too, honestly, I don't think I'm looking at a leading diagonal. My own personal take, at least one of the waves have to be impulsive for me to define this as a leading diagonal. So whilst the textbook may say 1, 3 and 5 can be corrective or impulsive, you're better off working it that do not call it a leading diagonal as long as you know, if you can't see any impulse in 1, 3 and 5. So I'm kind of deviating away from what the actual textbook definition is. To me, I have to be able to count a 5-wave impulse in either 1, 3 or the 5th wave. Usually it's the wave 1 that tends to be the longest. As I've said, to differentiate from a correction, you have to make sure that wave 3 is not the shortest wave. And 4 can cross into wave 2. So if you think about it, it takes an almost compressed look to the standard impulse on your right hand side. Kind of has this broadening, kind of ascending wedge type nature to it. And that is a leading diagonal variety, which we can only see in wave 1 or wave A. It was first discovered in 1970, and honestly, many markets now start off like this because it looks corrective in so many ways, right? You know, wave 1 may be the only impulse there. Wave 2, 3, 4 and 5 could all be 3-wave corrections. But you have to be able to see an impulse there. To me, you have to be able to uncover at least one impulse in waves 1, 3 and 5. Of course, it doesn't have to be an extended wave 1. It could be an extended wave 3, right? Or wave 5. But generally speaking, in my experience, I have to be able to see an impulse there in waves 1, 3 or 5. Usually it's in wave 1. Now, let's discuss an ending diagonal. Well, this is the opposite, in the sense that rather than being at the start of the move, this is towards the end of the move. And this really helps to terminate an impulse or an ABC sequence of any kind. You can usually only find this in wave 5 or a wave C. In fact, I should take away the word usually because that is where you find it. If I'm looking at this somewhere else, I'm not counting it right. There is often RSI momentum divergence as we make an incremental new high. Here, very overbought, perhaps 90, then 80, then 65. And often this is a bit of a throwover. It's a bit of a throwover, which moves above the line connecting 1 and 3. It's a bit of a kickover, and then you get the vicious move down. If you're looking at an impulse that ends in an ending diagonal, what this is showing is a lot of the time retail FOMOing in at non-opportunistic prices and smart money offloading to retail. They're giving them slight incremental new highs, but the momentum is weakening as evidenced by the money flow index, the MACD on the RSI, and it's not going to end well. Often once this move starts to materialize to the downside, it will make its way right to the start of the actual wave 5. That is just a textbook target to aim for. That's just a bit of experience there for you. So this is an ending diagonal only to be seen in wave 5 and wave C. Look for the RSI divergence. You can also find divergence with the money flow index and the MACD. We discuss all of this in the masterclass, and you're looking at each of these waves to be 3-wave in their interior, basically, right? So each of these are going to be 3-wave in their makeup. So that's going to be 3-wave. Let's copy and paste that into here. This is going to be 3-wave. And this is going to be 3-wave, right? And of course, we can just, well, let's just zoom in a little bit and make that a little bit smaller here so everyone can see what we're looking at here. So 3-wave, that's going to be 3-wave. Let's make that a little bit smaller there. And this is going to be 3-wave. Then, of course, I'll just freehand it because it's going to be easier. This is 3-wave too. So as long as you're counting the wave correctly and the entire impulse, you are not looking at a triangle here at all. Although it may be shaped at one, technically you're looking at this as an impulse. It's very much like a triangle in that it's 5 lots of 3s and it's almost like a wedge shape. But if this comes in a wave 5 position or in a wave C position with RSI divergence, you need to be watching out for that big move down. And like I said, once that big move down starts, it often makes its way to the start of the impulse. Okay? Now, there are various ways you can label this. Honestly, I've always labeled it as an A, B, C, D, E, which is technically incorrect. That's just what I've done through experience. For the purpose of this module, I've labeled it as an impulse, because it is defined from an impulse. If you label this as an A, B, C, D, E, it could give people the wrong impression that they are looking at a correction. Once again, that's more of a sort of experience, really. That's just the way that I've always done it, just to remind me I am looking at something corrective and not impulsive. But technically, it's best to stick to the actual way of doing it, which is to label it as a 1, 2, 3, 4, 5. An ending diagonal can only be seen towards the end of a trend, and it doesn't work well. And you can see that in the name. It's ending. It's not leading. A leading is like this, and this to the right hand side is your textbook definition. So that concludes this module looking at leading and ending diagonals. Please have a look through parts 1, 2, 3, and 4. And on the next modules, we'll be going over Fibonacci. How exactly do we project our targets and are able to decipher exactly when the turning points are going to be coming, and when do we buy and when do we sell? And I'll see you guys on the next video.